Okay, another week of weekly option trades and option income updates. So this would be week 50 if I was doing this every week for 2025. At the beginning of 2026, I'll start with week 1. So what you're about to see is not any recommendations. It's just what I'm doing with my option trade. So this is just option trading. It's not the distributions from the different income funds or anything, just options. So let's take a look and see how things are going. All right, so here's my option tracking spreadsheet. It's not actually mine. I got it from a different YouTuber, and then I modified some of the formulas and some different things to suit my needs. I added a couple columns and deleted a column. But anyhow, this is what we're looking at. So this week right here, the market is still open, but I'm pretty much not going to close any more trades or make any more trades today. Well, this is the week that just ended. Today's actually the 12th. So from Monday through Friday. So these are sorted by the dates I closed the trade. And then that way I know exactly what I ended up profiting, because 9 times out of 10, I don't wait till these expire. I buy them back later before the expiration date to lock in the price, and mostly to free up the capital to find something shiny new toy, you might say, to play with for a week and try to make some income on a different trade. So anyhow, let's go over the trades that we did. So I had sold a cash secured put on the Nvidia double leverage, and so this was kind of a test drive. I did one contract. Strike price was 75. It was filled at $3 per share, and then that's what I sold it for, and then I bought it back later for 93 cents. I had to put up $7,500 in capital because 75 times 100 is 7,500. And when it was all said and done, I held this for 8 days and profited $207. So if I did this once a week for over a year, that'd be 125% return. Of course, you're not going to do that probably for an entire year. So I closed this one on the 9th, which was a couple days ago. And another trade we had out there, we had a couple cover calls. So let's look at the cover calls. We had a cover call here, cover call here, cover call here, and cover call here. So this account is a retirement account, IRA, and the QQQ and SPY are my two biggest core holdings. And they appreciate whatever they appreciate, SP 500 and QQQ, and it's all fine and dandy. But what I do, I also write cover calls way out of the money and just try to skim off a little extra percent return each year. So if I highlight these, you'll see that from these 4 trades, we made $800. Now, if you look at the annualized returns on these ones, we only have 2.5% here, 1.5% here. See this one here, 7.8%, which wasn't too bad. And then the other one, 6% down here. So I don't know if I can do an average of those or not. So I can, so that's an average of 4.55% annual. So I just made a video about a week or two ago, and the title was squeezing a little more out of your S&P 500, SPY, and QQQ. And basically, this is what it's about, just selling some cover calls and squeezing a little bit extra money out. I closed these early because today the market is down, and so the price has decayed quite a bit. So I don't try to time the market, but I'm assuming that next week we'll have a bounce back. So rather than waiting till expiration, which would have been the 19th, be a week from today, for these two, I went ahead and bought them back early, locked in the profit here, and then Monday or Tuesday or Wednesday, if the market pops back up, I'll jump back in and sell some other cover calls. So if I look at the chart here real quick for SPY, S&P 500, this is a 3-month chart here. Okay, so this is actually the 1-day chart. I actually probably right around in here actually was those cover calls, which looks like it might have been perfect timing because it looks like it's going back up, which would made those cover calls worth more money, which I kind of didn't want them to be worth more money because I want to buy them back cheaper. So anyhow, I just got kind of lucky on that one. So luck sometimes is a good thing. So luck is sometimes a good thing. So next week, if this keeps going up, I'll sell those cover calls again if the price keeps going up. And I had those cover calls at 705 strike price for SPY, and for QQQ 655. The other one was 650. So I'll probably bump those up depending on what the delta is. So the delta for these were quite low, 0.11, 0.12. And my goal with this is not to have those shares taken away. So that's why I write the cover calls way out of the money, which is typically 4 to 5% higher than the current trading price. And I'll go about 3 weeks to 5 weeks out. That was the cover calls that we closed. I had a couple of cash secure puts on the double leverage Amazon ETF. Now, double leverage can be a little dangerous. And when I say dangerous, I mean more volatile. So as far as dangerous, I don't know if it's dangerous or not. So some of these companies like Nvidia, Amazon, and Tesla and Starbucks, I don't think those companies are going to go broke anytime soon. So I did do a cover call on Riot just to test it out. It's pretty volatile, and I don't know if I'll do any more trades with that or not. Sold a couple cash secured puts, strike price 14, two of them, and ended up making $46, which is fine. But I'd rather stick with indexes or stocks that aren't going to go anywhere anytime soon. So people will say that the double leverage Nvidia or Tesla or even TQQQ, which I got a trade up here, are dangerous. But like I said just a few minutes ago, just because they're volatile doesn't mean they're dangerous. In my opinion, only my opinion, this is not financial advice. Things like TQQQ, yeah, they're going to move triple approximately of the QQQ, but in my opinion, that just creates better premium, and I take that in consideration. So if I'm going to do an option trade on TQQ, I just got to like remember to triple whatever type of move that I'm expecting and be prepared for it. And the other thing, when you see the amount of money for any single trade that I'm doing, we have about a $10,000 collateral here, 6,600 here. Now this one's a little high, 40,000, but 18,000, and don't count these cover calls, they don't count. But like 16,000, then 2,800, 7,500. So typically I'm only risking a very small percent of my total account on any one single trade. So what I'm trying to say is, let's say Amazon here, which is trading for about $35 per share or so. Let's say it went down to 20 and I have to buy those shares of stock, 200 for 33. That would put me down a couple $1,000s. But at that point, I just sit and wait, and I assume Amazon someday will bounce back. And when it gets back up to my cost basis, close to 6,600, when it gets to a certain point, I either sell those shares or start selling cash secured puts. So anyhow, so for the week, for trades we closed this week, $778. And if we go back last week, highlight these ones, 3,800. So that was last week. The week before that was not too bad, 2,400. The week before that was the bad week, 95, because of thanks to PayPal going down. And the week before that was 1,500. So you kind of see how things are averaging out. The other thing I was interested in is how long do I hold these options for? So if I go back here, let's say for the past 3 weeks, if I highlight these columns here, these are how many days I've held the different trades. And if I go down here and click on average, you can see average of 9 days each for each contract. But if I highlight just the past week or so of trades I closed, average is 11 days. And because we had several days there of the market just kind of going sideways and not really doing a whole lot, so I was in trades longer than what I typically stay in. Also, if you count these 4 that were covered calls, you see those were held for an average of 13 days. So going forward for next week, these are still all the trades that are open that aren't closed yet. If I were to put zeros in here, so let's say the contracts went down to 0, which is what I want to buy them back at 0. For example, I sold PayPal at 538. I want to buy it at 0. So if all these went to 0, which I obviously buy them back before that, but if I were to hold all those, that sum would be 5601. Obviously, I'm not going to hold all those till the very end, but I'll be making new trades probably next week, closing trades and wheeling and dealing. And with that, we'll end the video. Once again, you can see the different tickers that I'm messing with. And if you pop over here one more time to the Yahoo chart. These are tickers that I'm following in no particular order. These are not recommendations, but these are just things I'm following. There's 30 tickers here. Just because there's a ticker here doesn't mean I have any intention of doing a cover call or cash secured put, but these are tickers that I probably have traded or I'm looking at because I'm considering. So that's just for information purposes only, not a recommendation, obviously. So if I forgot to ask, if you like this type of thing, make sure you subscribe. It's not financial advice. And with that, we'll see you next week with another update.